Hello again, everyone. This is Joe Henches with Beyond the Chart, and this is technical analysis of the stock market today. Today is Monday, May 11th. Take a look at the market action today. Indicators, we're going to look at high yield bond fund, TLT, US oil, and gold. 4 stocks tonight: Apache, Caterpillar, Chicago Bridge and Iron, and United States Steel. Okay, start off here with the Dow Industrials. It was down 85 points today, pretty much down most of the day. A little bit of a pullback, and we'll see if we get any more or whether this was just a pause after a 2-day move here. Had a pretty good sized 2-day move, and this isn't a whole lot of correction, but it's kind of hard to read a whole lot into 1 day's worth of action. Let's see how the S&P 500, very similar type look. So we'll, again, it's really hard to look at just 1 day's worth of action. Now, you look at the NASDAQ, these two little, the trading range is much tighter, okay, in here, and both about the same, almost look like kind of doji or spinning top type candles, really is what they look like. Not super bullish. I mean, I wouldn't have called this super bullish on Friday, except it had, had the nice gap up. We do have the 10, the 10 is below the 21 here, so the short-term trend is what I would call, slightly to the downside. But the intermediate and long-term is still up. And New York Composite, again, same thing. Short-term trend is slightly to the downside, but, we had this big gap up. Now we get a little pause today. Again, really hard to read. We're still in this congestion, and that's no different. I mean, we look at the S&P 500, we're still in this congestive action. We have not taken out this high. We have not taken out this high. And, we're still in this trading range from all the way back here in late February, back through this whole time period right in here. So nothing has resolved itself as of today. New York Composite. All right, I'll come back to that. Russell 2000, basically almost unchanged, up 0.89. Again, a doji bar. It went up, rallied like it was going to take off, and then it came right up back down. So here's a little bit stronger short-term downtrend here, and you've got the 21 trending down, but it's not below the 55 yet. So again, all of those moving averages, we got this wedge that is pulling down out of. We'll see whether or not we get some continuation further to the downside and hit the bottom of this wedge. Let's see, short-term trading index. We pulled up a little bit. So the 10-day moving average is at 0.918, so 0.92, call it. So we're back above the 0.9 threshold that I like to look at. The volatility index, the VIX, it closed above the 10-day moving average in here and closed on its high for the day. So kind of, in rally mode here on the VIX, which coincides with the Dow, the S&P 500, dropping today. So again, we'll see do we close this gap? Do we get some follow through? Was Friday just a very sharp pullback here on the VIX? High-low index, let's see, what is that? 33. Yeah, 33 more new highs than new lows for the day. And again, we're just, it's not a very solid reading. We're just kind of right back in the neutral zone on this. Let's see, the next one. Let's take a look. And I don't know if the McClellan oscillator updated or not. We'll try to take a look at that. I don't think that's correct. Well, it keeps showing that. It just doesn't seem like that's a logical reading for today. So I don't think this is updated yet. And we'll look at that again on Wednesday. It just takes a while for that to update correctly. All right, let's take a look at the high yield bond fund. There it is. Okay, so this pulled down with the market. So we, had this little 1-day blip in the high yield. And remember how I talked about this on Saturday? This is trending down. How this just has not been confirming the rally in the market over the last, quite a while. And now we're getting, this head and shoulders type of consolidation pattern in here. and we'll see whether or not this trend line is going to hold. And so I got a feeling we're going to find out about that this week. All right, let's see. The next one is TLT. TLT continues in its downtrend. So long-term interest rates are rising. This keeps dropping. You would think we'd start to get some support right in this congestion right near this high, which, you know, got support here. And that's the zone that we're now into. So we'll see whether or not we kind of bottom in here on a short-term basis or not. But right now, pretty solid downdraft at this TLT's in. And I'm gonna start going back to United States oil. I was using 12-month oil. When I kind of scanned back at it over a 5-year period, it didn't really seem to make as much difference as I thought it did. And this is definitely the more active ETF on oil. So I'm going to stick with this. I mean, look at the 50-day moving average of volume is 27.6 million shares. It's 12.6 million traded today. All right, so it was, what was it? Down 0.04 today. So 20.38. So basically almost unchanged. So it was about, you know, up slightly over the last 2 days, but not doing a whole heck of a lot today. The next last ETF we're going to look at is GLD on gold. And gold, similar type thing. Now gold, GLD dropped down 0.44 here at 113.53. But again, not really showing us a whole lot more other than we're in the short-term downtrend. We're in a long-term downtrend. So we'll see whether or not I'm looking for it to continue to pull on down. That's what I think is happening. But, you know, this looks a little messy and a little unclear right now in here. Okay, let's take a look at Apache tonight. Now, Apache, you know, it was down 2.41 today, $2.41 today. So it's continuing its short-term pullback. I'm kind of wondering whether or not we got a little fan line action going on here. You know, this is possible because we got this trend line here. You know, you can draw another trend line here, and a lot of times, if this is fan lines developing, you'll pull back to the previous fan line. Okay, here. So that could be what's going on, and then you turn and go up. So we'll kind of watch for that. It seems like it's trying to put in a bottom, but it could also be a little more negative than that. I mean, you could draw a trend line across here, and if that trend line gets broken, then this thing is going to downdraft even a lot more. So we'll see whether or not it holds right here at that fan line. Okay, so let's look at Caterpillar. Caterpillar was up today. I think an analyst had upgraded it from neutral to accumulate or whatever, and had a price target above 100 or something like that. Caused a jump in the stock today. So it's continuing its short-term and intermediate trend to the high side. The long-term trend is still down, but again, the long-term trend is always going to be down. These have got to turn first, and that's always the dilemma you find yourself in. You think, well, okay, maybe the trends are all turning. I'll jump on board, and then all of a sudden it gets slammed back down again in tune with the long-term trend. So it's nothing is ever guaranteed. That is for sure. And we're getting a little bit of divergence right here. A little bit of divergence on the demand index, but again, I need a little bit of a turn to tell, to say that these are. So it's showing a little bit of divergence showing up on this move. We'll see what if we continue. If we get another up day, that divergence will all disappear. If it continues to push like this. So see if there's anything else. I'd like to get my crosshairs back. I mean, it looks like the next resistance area is going to be up where right in here, which is around 94 to 95. And that would be where the 233-day moving average is coming in as it comes down. If this thing continues to move up, we'll see whether or not that happens. Let's see. The next one is Chicago Bridge and Iron. And see, here's another good example. I mean, the long-term trend is down, although the 55 is rising, but it's below the 233, which is in a fairly solid downtrend. The short-term trend is now down, and then this thing started to roll over and crack. So now it's, the real question is this is it going to pull back up and rally further and try to get back above the 10 and continue a rally mode, or is this thing going to roll over? And that's the tough thing. It hasn't gotten itself oversold here. Big volume on this move on Friday, and that was happening on Friday when we had the market up 270, 80 points, wherever it was, a big day, and CBI was down. So this could be nothing more than just a little short-term pop in here. And again, we'll see. We'll have to watch to see whether it does this. Let's see. It seemed like there was something else I saw this. I started to draw a trend line from here across the top here. That may be a little premature because I'm just kind of watching to see whether or not we get a rally back up into here and try to turn again, which would break this upper top here, across the top here, or whether it continues to roll back down. Let's see. So no positive picture to me on that. It's not real clear. United States Steel, and we're getting a lot of this mixed signals right now. We're getting a lot of mixed signals where the long-term trend is either down or up, and then the intermediate trend's not in sync with that, and then the short-term trend is, it's like I'm seeing very rare situations where things are all lined up like this. They're all lined up in line bullish or all in line negative. So we'll see. I just think we're in a lot of that transition type mode, a lot of congestion, and a lot of the market trying to digest what the heck's going on. Now, United States Steel, this is another example in here. This looks like overlapping waves in here to me. So this seems like corrective action, okay? And if this is corrective action, I mean, it sure isn't this type of impulsive action. So if this is corrective action, then that makes me suspicious that it's going to continue to then break down out of this corrective mode and come back down and break this trend line. So that's why I'm not quite trusting a move like this back up in here. Now, I was in here, had some calls. I can't remember if I got in here or here, one or the other, then got stopped out on this move after earnings. Okay, so here we had the short term and the intermediate aligned to the I side, and we thought, okay, well, maybe we're making a nice turn coming up. Yes, the long-term trend was down. So here's another perfect example where it corrected in line with the long-term trend. And so now it's popping back up a little bit now. Short-term trend's down. So again, a little bit of mixed signals, and this could be just simply closing the gap. We'll see. But right now, I'm going to stick with the fact, my view on this is that we've got overlapping corrective waves, and that's the picture. And so I will be watching for something that will line itself up with that picture. So, all right, that's it for today. That's the 4 stocks. Let's see, Tuesday, we'll be back. I am going to take a look at the natural gas ETF and put out a video on that tomorrow, hopefully tomorrow morning. I haven't looked at that. I've looked at it briefly before, but I haven't looked at it in depth. So take a look at that and see what's going on with that. And then I'll be back Wednesday night with another market update. So, hey, if you're not watching this, by the way, at my website at joehenches.net, head on over there. You can also get to it by beyondthechart.com. Make sure you bookmark those. And if you're getting my emails, like I mentioned on over the weekend, make sure you're putting it in the primary so it doesn't get lost or get buried in with promotional type emails or spam emails or whatever. So anyway, that's it for tonight. Have a great Tuesday, Wednesday, everyone. We'll talk to you on Wednesday.